In today's video, I am going to be giving you a couple of options that you could have if you want to invest in very similar ETFs as the ARK Cathie Wood ETFs in the United States. Obviously, this is for Canadians. So BMO has a line of ETFs that I just recently noticed that line up very similarly to the ARK ETFs down in the States. Now, Cathie Wood, if you don't already know, is a ridiculous visionary. She sees stuff in the future that we don't see today just as of yet. And she is becoming very profitable at doing so. So let's get down, let's check these amazing ETFs out. I think that they could be fantastic over the next 10 to 20 years. So this first ETF is Arcg. This is one that I absolutely love. I do own this ETF. Now, what this is essentially it's an ETF that invests in genomic research. So CRISPR type stocks as well as mRNA type stocks. As we already know, the American government as well as the Canadian government is investing heavily in mRNA vaccines and mRNA technology, but also there's a new on the cusp technology that they are also investing in with this same funding, and that's the CRISPR technology, the ability to change your DNA. Now, if that sounds scary, it can be, but what it basically is it allows us to essentially remove just cancer like altogether. Like the ability for our body to create cancer cells, gone, no more. That's what CRISPR is all about. But the crazy thing about CRISPR is it needs somewhat of an mRNA style vaccine to be able to work inside your body. That's why they kind of work together. But mRNA works in your RNA, which is the other side of your DNA. But also, CRISPR is said to be able to reverse aging within about 50 years. So within 50 years, we could technically live forever if we invest in these stocks. So that would be kind of cool, and that's why I'm personally investing in them. Now, something about the ARK ETFs is their MER is ridiculously high at 0.75. And the other thing is that their volume is also through the roof too. Cathie Wood is the creator of these stocks, and she's just amazing overall. Now, the chart on these ETFs are ridiculous. Like, they blew up last year. However, there's been a mass exodus of these stocks, mainly because they are not yet growing at this kind of a multiple. They are growing what we see back here. So, in theory, this could have a little bit more room to go down. However, what you are seeing is a lot of investment into this type of technology from the government. So I don't personally think it could drop below that 75-ish mark myself. It may reach down to in the 50 to 60 range potentially, but this is still a very interesting stock to hold in the long term. Its top holdings is, of course, Teladoc Health at a huge multiple, or at least a huge percentage. However, what I really like, the company I really like, is Regeneron and CRISPR right now. Both of those companies are really heavily investing in this type of new technology, and it's really interesting. CRISPR is obviously named after the technology itself. Now, I wouldn't be expecting a dividend from these stocks. However, once a year it does seem like they do pay a dividend, but it's not a huge dividend. Now, BMO's option is ZGen, Z-G-E-N. It's MSCI Genomic Innovation Index ETF. So as we can see here, the index developed in collaboration with ARK Invest. That's pretty cool, to be honest with you, is based on the MSCI ACWI IMI index, which includes large, mid-cap, and small capitalization companies across developed and emerging markets. From there, what we are seeing is obviously they are going to be really investing in, of course, new products and services in the fields of genomic sequencing, synthesis, analysis, or instrumentation, enable biocomputing, bioinformatics, molecule diagnosis, and agricultural biotechnology, which is really cool, cutting-edge stuff. And also, their MER is much lower. However, their market volume is also much lower, and they do pay an annual dividend as well. And interestingly enough, risk rating is, of course, medium, which to me is interesting considering this is like cutting edge technology. Now, its top holdings is Moderna, which is kind of interesting. That's more on the mRNA type of technology, but Moderna is also investing into CRISPR as well, from what I've been reading. Same as Regeneron, and I've mentioned those before. Roche is also investing in this type of technology. Pretty much everyone is. It is the future. However, we do see CRISPR is held in this ETF, but at a much lower percentage. Now, they haven't been around for very long. It's only been around since January, but as we can see, it hasn't had that massive drop as of lately as those ARK ETFs have. It's only been recently, over the past month or so, that it's actually had a decrease. So in my mind, this may be actually a bit safer of an ETF than the actual ARK Invest ETF itself. Next is ARKW. It's next generation internet. That's basically the future of the internet. Again, higher MER of 0.79%. Very high volume, so it's easy to get in and out of it. Now, it hasn't had as much of a drop. However, it does have a very similar look to an upside down head and shoulders, so it's kind of interesting. It did have that one big point earlier. Now, again, sometimes when it comes to next generation type of technology, whether it's when it comes to medical, computing, whatever, you're going to see occasional big jumps like this. Do not get caught up in those big jumps. If you start seeing it jump, you could get in and be okay and sell up here, but what's the odds? The odds are you're going to be buying it up here and it's going to be going down. You're going to be then losing faith in it. You have to wait until that drops and then stabilizes as it has recently. Again, about a once a year dividend. There are a few years like 2019 where they missed it, as well as 2016. Will they pay a dividend this year? It's hard to really say, but it is kind of interesting how it is actually quite a large dividend considering it's looking at future technologies. Its top holdings is, of course, Tesla, and we all know that Cathie Wood is a massive Tesla bull. She's holding it at 10% of the total assets of this ETF, so that could be a big reason as to why people may not invest, is because Tesla is too much of a percentage in this ETF, and you might as well just buy it straight up. But you are getting extra, of course, companies that are very interesting in my opinion, like Bitcoin is only going to go up from where it's at right now. And Coinbase, of course, is the future of banking, essentially, potentially when it comes to cryptocurrency. So it's going to be very interesting anyways. And the BMO version of this is ZINT, Z-I-N-T. It's the BMO Msci Next Gen Internet Innovation Index ETF. It's also got a much lower MER, pays a dividend once per year, and its market volume is basically non-existent. These are still kind of new ETFs, so that could be potentially why. Maybe it's because they're not as big of a name of an ETF. That could be why as well. So, for example, there is a big push of like a lot of volume when it comes to the ARK ETFs, but these are not getting as much of a volume. Does that mean that they will eventually get more volume? It's hard to say. Usually ETFs and mutual funds that don't have the volume tend to get cut and just move to other places eventually. So that may be a risk when it comes to some of these BMO ETFs, but they've only been around for a year, so keep that in mind. The ARK ETFs have been around for a much longer. Actually, technically, the BMO ETFs haven't even been around for a year yet. And this is what I mean. Inception date, January 20th, 2021. So not even a full year yet. So that's a big reason why. Its top holding is not Tesla, which is kind of interesting. Its top holding is Microsoft and Apple, so it's not necessarily next gen in a way. These are known companies right now. Actually, all of these companies are known companies, unlike the ARK ETF that has some, when you start getting farther down that list, some companies that you may have never even heard of. And Tesla is part of this ETF, but at a much reduced percentage, at only 1.8% instead of 10%. And even when you start getting lower on this list, you're still seeing a lot of major companies that are, of course, part of eBay. these are known companies. These are massive companies that are not necessarily next gen. For example, some people may have never heard of a Grayscale Bitcoin Trust, and that's what I'm talking about. Future technologies. Again, Zins's chart also has not had the massive negativity as these ARK ETFs have as well. It generally is moving upwards. ARK FinTech, ARKF, is another option as well, which is fantastic. And this is when you're looking at financial technologies. The yield is a bit higher of not being basically zero. However, you are still looking at a high MER and still looking at some pretty good volume that you can get in and out of quite easily. It's also not had the drastic drop, but it's still had a massive drop since its top, and it's pretty well, I guess you could say, stabilized slightly near the bottom of its trading range. And if you actually look at a lot of the market that's come down over the past couple of months, you'll actually see that they've pretty much stabilized, and a lot of the market is near its lowest point of where it's stabilized off, at least a lot of these stocks, which tells me that there could be potentially a push in a month or two into a lot of these stocks yet again. Because you just have to remember, the money doesn't go anywhere. It just gets moved around to different places. So we have to look ahead and say, well, these stocks, certain areas, look like there could be a push into them because they're trading in a range and they're at the lower end of that range. If they break above that higher point of that range, that usually means for the algorithms of the market, or at least the algorithms of the machines that run the market, to push that stock higher. As we can see, it does pay a very small dividend yearly. And we have to remember that we're looking at potential future market movers when it comes to fintech. Square is a massive, amazing company. Kind of confused as to potentially why Shopify is there, because they're more for on the shopping side, the website development for the stores. However, I do understand it because they are starting to take payments and things like that, so it's making sense. PayPal is fantastic. I love PayPal. I use it for my business and many other businesses as well. Kind of interesting how Coinbase is on there. I understand why it is. It's definitely the future when it comes to cryptocurrency and banking potentially, so it is quite interesting. When it comes to the BMO equivalent, it's ZFIN, BMO MSCI FinTech Innovation Index ETF. This one's again got a 0.45 MER, which is much lower. It does give a dividend annually, and its inception date again was in January. We don't know what the dividend will be just as of yet. There is no history on it, but they do say they will pay yearly. From there, this is interesting. The companies that it holds are not necessarily future market movers, really. So Salesforce, obviously, that's going to be big going into the future. Kind of curious as to why Nvidia is on here, but it kind of can make sense considering that they produce the chips for blockchain type stuff like Bitcoin. And then there's Apple, which is now doing credit cards and potentially going into that pay now or buy now, pay later idea. PayPal, Amazon makes sense because they were looking at creating a credit or having a credit card or a buy, again, same thing, buy now, pay later idea. Visa, MasterCard, they're current companies and they're always going to be in the future most likely. Alibaba for a while was looking at having that same idea of buy now, pay later. So again, some current companies, some future companies, some curious companies. Altogether, still a pretty solid ETF. When you start going down the list, they do have some interesting names like Pinterest. I don't understand how Pinterest is on there, but they do take payments for advertising, so potentially that's why. But I don't use Pinterest myself as much as I probably should. And since it was incepted, it's basically just trading sideways. Another interesting ARK ETF is ARKQ. Now with this one, what we're looking at is again that high MER, high volume, and not really any dividend at all. Again, has pulled back just like every other ARK ETF, which to me is just so curious. But it is again trading at the bottom part or the bottom area of its range that it's been trading from, roughly in the middle to the bottom lower end. So it's quite interesting to myself. Again, pays basically once a year. It missed 2016, missed 2019, pays somewhat of a dividend, about maybe a 1%-ish dividend at the end of the year. However, at the same point, I wouldn't be expecting it. Tesla is obviously an interesting part. This is ARKQ, so it's autonomous technology and robotics. Tesla is right at the forefront of that. Alphabet has, of course, their electric car, or their companies that they invest in would have self-driving cars. These are all kind of interesting technologies when it comes to cars, but as well as AI. Tesla is AI. Alphabet has AI. UiPath technically has some AI in it, and most of these other companies do as well, so it's quite interesting anyways. The BMO equivalent is ZAUT, and with this you're looking at the BMO MSCI Tech and Industrial Innovation Index ETF. This one again will have a much lower MER, and it does pay yearly. I guess you could say they guarantee it annually because they're saying that's how much it's going to be. But again, this type of stuff, this is future technology. I wouldn't be expecting a massive dividend. I wouldn't be buying it for the dividend. Its top holdings, again, is going to be more conservative when it comes to the companies. It's not going to be looking into the future. It's going to be more of what is working today, and that is Nvidia, Tesla, Apple, Amazon, Taiwan Semiconductors. Fantastic dividend stock, by the way. For dividend growth, that's what you want to get right there. But from there, Intel, Alphabet, some intuitive, surgical, great companies altogether if you're looking for investing in today and not into the future. Uber Technologies is another one. Ford. So kind of interesting type of technologies, and basically trading sideways as well. So basically the differences between them is when it comes to the BMO ETFs, or the BMO equivalent of the ARK ETFs, what you are essentially going to be getting is companies that work today and not necessarily what will work in the future. However, they're basically blue chip style companies in most cases right now, and that will probably continue into the future. So not as much future growth as the ARK ETFs. However, at the same point in time, what you're getting with BMO is a much lower MER, which, depending on how much the ARK ETFs increase, you may actually get a better return on the BMO ETFs, but it really does come down to how much return on investment comes from the ARK ETFs. These are two different options. In Canada, you can technically invest in both ARK as well as the BMO ETFs, so keep that in mind. I hope that this video has helped you. If it has, hit that like button and subscribe, and I'll see you guys again next time.